when it happens, let's just say when it does, it's not going to be pretty. And it's not necessarily the kind of world that any of us would wish for. But it's coming whether we like it or not, because the money is being printed. And if they stop printing the money that they're printing, the whole system collapses on itself. So these guys, if these guys have a mantra, the people who are in charge, if they have a mantra, it's live to play another day, okay? These guys are experts at kicking cans down roads, and they will continue to kick the can down the road. If they run out of road, they'll try to kick the can in the bushes. They will keep trying to kick the can until they come to a brick wall, and then they will not be able to kick the can any further. This will occur. I can't say when it's going to occur, but you see, I don't care because I know how the story ends, and I'm playing for the end.
Welcome back to Liberty and Finance. We have a returning guest who is widely anticipated by our viewers. This is Rob Kirby, founder of KirbyAnalytics.com. Rob, thanks for joining us this Wednesday, September 9th, 2020.
A pleasure to be with you again, Dunnigan.
I maybe every week mention to my wife how the visual metaphor that you proposed of Wile E. Coyote running off the cliff edge and dangling in midair and hasn't realized he's going to fall keeps pounding itself to the front of my thought process as we look at the world that we're living in many different ways. So I guess if you could just start us off with your current updated view of the time that we are living in and the most important factors that you see us traversing. I know you and I were just sharing about children and grandchildren and what kind of a world we're heading into faster than perhaps ever before.
Yeah, well, you're correct in stating that we're living in unprecedented times, because we most certainly are. And the reason we're living in such unprecedented times, Dunnigan, is that we are all living to be witness to a dying financial system. And the financial system has been kept artificially sustained, or it's been kept artificially sustained with an obscene amount of money printing. And the biggest part of the money printing is not recognized or officially recorded anywhere. We have the expansion in the Fed's balance sheet that we can all see and point to, which has grown by a magnitude of, 3 or 4 trillion in the last 6 months. But I'm just going to say that the work of Dr. Mark Skidmore and Catherine Fitz, Skidmore's latest work dealing with Social Security trust accounts, are highly indicative or suggestive that there is indeed very likely many, many, many more trillions in unrecognized and undeclared money being printed and basically being spun out of thin air through manipulations in Social Security trust accounts. When you have $32 billion in assets, of retirement assets, with a yearly turnover of 12 trillion, let's just put it this way. That's not management of retirement assets, because retirement assets aren't managed that way. Another Social Security trust account with 250 billion in assets had a yearly turnover of 44 trillion. Okay, this makes a mockery of everything that we're told and believe to be true with regards to velocity of money, which they tell us is basically at zero. But when you have turnover in these select Social Security trust accounts of magnitude that I just mentioned, let's just say there's something going on there, and it isn't management of retirement assets. It's called blatant rank money creation. And this is going on at an unprecedented level. And believe it or not, this will only hasten the demise of our current monetary system. And they basically are let's just say they're the tombstone of our current financial system, where the epitaph will be written in time. It's so far off the charts, it's really hard to say. But let me just say this. The reason why we have a stock market at record highs and continuing to make record highs, despite fundamentals that would suggest otherwise, the reason why we have bond rates at zero, effectively right across the curve or close to zero, it's all part and parcel to this money that's being created, and most of it off-book dollars, dark money. It's also the reason why precious metals prices, despite unprecedented unavailability in physical metal, which I'm sure you get a whiff of in your current incarnation, flogging physical metals for Miles Franklin, metal is in short supply. Physical metal is. Let's just say futures contracts on Comex will never be in short supply. There's an endless amount of those that are printed out of thin air. But real metal, and I mean, I've talked to people about real metal all over the world. Now, let's just say in Asia, it's very difficult to buy $1 million worth of metal right now. I know that firsthand. And physical metal and the waiting times to take delivery of substantial amounts of metal are increasing with each passing week. But this, like I say again, is all part and parcel to, recent price activity in the metals. We've seen a substantial sell-off after making highs maybe a month ago. We've seen some substantial sell-offs in the paper price of metal. And yet, as the price of metal sold off in the futures exchanges, the supply of physical metal continued to lessen. And, it's counterintuitive to what one would expect with a tightening supply. One would expect naturally supply and demand tell you that, prices should move up. But, with the money printing that we have, you can make things look other than they really are. And that's exactly what monetary authorities are doing. And this is all to perpetuate the illusion that the dollar's strong. And the way you do that is you buy the bonds, you monetize debt, and you pressure all things anti-dollar. That would be the precious metals, and that would be, in selective cases, the cryptos. So, and the cryptos have been often referred to as the new gold. So, and there's a strong part of that which I'm a believer in, but I place my greatest faith in physical metal because you can't print it.
About 2 years ago, I think it was, and I believe it was you, also used a very colorful metaphor, which was just pressing back to my mind again here, of the movie The Weekend at Bernie's, where there's this guy who has expired, he's dead, and yet these other characters in the movie are trying to prop him up to make it look to all others around there as though he's still alive.
You put a martini in one of his hands and you stick a cigar in his mouth, and you get somebody sitting behind him who can throw their voice. And, next thing you know, you've got a little marionette, and he'll say and do whatever you want him to say. And that is the make-believe world that we're living in right now. We have incredulous events going on in the monetary realm, and this is all being achieved with money printing, much of it unrecognized, undeclared. And I mean, $10 or $20 trillion a year in dark money buys a lot of love still today. So, but this is what we're witness to and what we've been experiencing. And very few people are willing to even admit or accept that this is occurring.
The fact of the data that's being unearthed by Dr. Mark Skidmore and his research team and others about the creation of unfathomable levels of currency, not just one time, but over a period of time, it has kind of a hot and cold effect on those who want to protect themselves from that. And we've got some questions from viewers that are about that, because when people wake up and they find out that there's trillions and trillions and trillions of dollars are being added to our currency supply, it drives people to want to get out of that currency and get into something real like gold and silver. And yet at the same time, it's disheartening to some of those same people, because they say, look, if there's such a force that can do this and knows how to use it, will we ever is there anything stopping them from just using that to manipulate the metals markets forever? Motor Vibranco says, do you think the silver price can return to under 20 in the near future, or is it higher from now on? There's another viewer who is asking, with the unlimited printing press going, what's to prevent them from just, the Federal Reserve from just suppressing metals and buying whatever assets they want unlimited? How can an ordinary person protect themselves in the face of that?
Well, I mean, this is a common theme, something you and I have discussed many times over many interviews. The reality is the powers that be cannot print physical metal. Physical metal has to be mined out of the Earth's crust. And let's just say we have probably achieved peak gold. We've probably achieved peak silver. And when I say that, what I'm talking about is that reserves are not being replaced as quickly as they're being depleted. And the reason for that is that the easiest to mine ore bodies have, for the most part, been already discovered in the world and have been mined. And the process by which they've been mined, it's referred to as high grading. And when you high grade, you exploit the most easily mineable or the richest ore bodies first, because margins historically in mining have been very thin, and people tend to mine the richest ore bodies first, which is the high grading part of the process, leaving hopefully the lower grade ore bodies for a future time, hopefully when prices are higher. Well, we're now living in the future time. Ore bodies have been depleted to some extent, or to a large extent, and the reserves that are replacing the exhausted reserves are much lower grade than the ones that were being mined previously. So this is why the cost to mine an ounce of gold has gone from $200 or $300 20 years ago up to $800, $900. I believe that there's a number of top miners whose costs are $1,100 an ounce to get it out of the ground. So, I mean, the cost to extract an ounce of gold has gone up over the last 20 years dramatically, probably by a factor of 3 or 4. And despite all this, Dunnigan, we have some clowns in the let's just say pundit community who think that the price of gold can go to $800 an ounce. I mean, it's a ridiculous proposition, because nobody can mine gold and make money at $800 an ounce, because nobody has a cost to produce under $800. And, an $800 price of gold means miners would be losing money on every ounce that they produce, and it's really hard to make that up on volume. So the price is what the price is. And the price alone tells us that gold is becoming scarcer, because the price to produce it is going up, not down. So anyway, best you lock and load and get some on board if you don't now, because it's only going to become more scarce and very likely in the near future. As to whether silver can be hammered back to under $20, I have my doubts that that can occur. But in a one-day Hail Mary, whether the powers that be might try to accomplish such a thing, if it were to occur, it would be purely a paper play or a futures play. It would probably be a buying opportunity of a lifetime, and such a depressed price, if it were to occur, would very likely be an extremely short-lived event. So I guess in a way what I'm saying is I would never say never, and I would never put anything ridiculous or asinine past the powers that be, but their ability to do such things is becoming more and more limited as time goes on. The way for metals is higher price. The way for cryptos going forward is higher price. And the reason is because they are anti-dollar trades. And it's not that cryptos are a be-all and end-all, or that metals are necessarily a be-all and end-all. Their price rises are only a reflection of the dollar being abused and being overproduced and overprinted. And I expect that to heighten because the notion of how much they are printing is gaining traction. So I look for higher prices in the anti-dollar trades, and I look for higher food prices. And you better have some of your, even if it's reluctantly so, best you have some of your preps in order.
So I guess that put to bed your take on the unlimited printing press should not be a source of discouragement for those who are going into hard assets, but actually correctly motivating people to take that prudent step. Back to the Comex, U. Sinclair says, what will be the scenario when the Comex fails to deliver physical gold or silver?
Well, in my view, that's already occurred. You see, there's a process by which Comex gets rid of people standing for delivery of physical metal. It's called an exchange for physical, where they effectively shunt the interest to London and let London deal. They basically wash their hands of dealing with people who want physical metal by shunting the interest to London in what's called an EFP, an exchange for physical, and literally hundreds of tons of demand for physical are pushed to the London market in this EFP, in this process, which there's conjecture over how London deals with these demands for physical metal. In my experience, I know that, let's just say in select cases at least, there have been generous premiums over the spot price of gold that have been offered as a cash inducement to have people settle their demand for physical metal off exchange and to not take the metal and take a higher fiat payout. I know this occurs, at least in cases. I can't say that it occurs in every case. There are other ways officialdom can make people back down on their demands for physical metal. And all one needs to do is ask Uncle Warren Buffett about this, because the talk in the trade is that Warren Buffett did have a very large position in physical silver many years ago. And there's a lot of people in the industry who believe that the seed stock that started SLV was effectively Uncle Sam convincing Warren Buffett that it would be a good time to liquidate his physical silver holding to seed SLV when they started up. Either way, Mr. Buffett did relinquish and liquidate his silver because I don't believe he holds any now. Mind you, he has found a new the Buffett machine has a newfound interest in mining concerns with a pretty sizable investment in Barrick. Funny that he would take a position in Barrick, a notorious forward seller of metal over the years, and a linchpin in the metals suppression movement, going back, let's just say a couple decades at least. But I mean, so I guess Buffett is on again, off again, and on again with the metals. So, but it seems anyway that Warren Buffett can even see the writing on the wall that metals are a place you have to be, even if you're sworn to not want to be there. And that pretty much describes him. Love-hate relationship with the commodity.
On that same theme of big players participating in metals, we certainly had the 18-month front-running of the Basel III Accord announcement, which declared finally gold to be a Tier 1 asset, but the banks had been purchasing record amounts, the central banks, for 18 months prior to that. And then more recently, I guess even continuing thereafter, Charm Akentil PO says, "Hi, Mr. Kirby, does the ascendancy of precious metals mean that banks are now purchasing large quantities of gold and silver?"
Good question. Are banks acquiring large amounts of gold and silver? I would suspect any that are doing so would be doing it very quietly and would not wish to make their actions public. Because this is a great way to have yourself at odds with regulators and with, let's just say, key leadership people in the Anglo-American world. It's not fashionable to declare one's interest in physical precious metal if you're a bank or a financial institution or a very, very well-heeled investor, like a mega rich person. So, is buying occurring? Yes, we have evidence of that because the physical supply is diminished greatly. So somebody's buying it. We know the Chinese have an appetite for physical metal, not so much the futures. We know that Russia and we know that a number of countries around the world have been buying metal. So if the banks haven't been, they're missing the biggest trade probably of their lifetime. So yeah, I would think, they're all buyers. And anybody who shows an offer is basically selling paper. So physical metal is not being expelled anywhere in any substantial amounts.
Back to the question about the Comex, different strings that they can pull or rules that they can change. New World Forward says, why is the Comex accepting bars from outside the LBMA system of good delivery bars? So we just recently heard an announcement about them expanding additional mints, that sort of thing.
Sure. Well, they're doing that because they don't have 100-ounce bars in their inventory to settle any demands for physical delivery. So the way you do that is you expand what's deliverable to include LBMA bars, which are typically 400-ounce bars, less than pure bars, because historically I believe the standard is 395 pure gold was the good delivery standard, and my understanding is they've lessened that purity fractionally to allow let's just say a wider amount of inventory to be deliverable against their contract. But I mean, this only speaks to how tight physical supplies are. I mean, the Comex futures contract settles. Each contract is representative of 100 ounces, and it settles in 100-ounce lots. The standard in Asia is kilobars. The standard in London is 400-ounce bars. So you've got competing form of gold that is deliverable in 3 major markets, 100 ounce in New York, 400 ounce in London, and kilo bars in Asia. It sure appears to me that Comex is having trouble, finding enough 100 ounce bars to maintain the illusion that they're really a true price discovery venue for physical metal, because they clearly aren't.
Back to the question that you raised earlier about the cash settlement option that the Comex can use and sometimes at a significant premium over the prevailing spot price. It just triggered the thought for me is back when we saw this separation of the physical price, including premium, for if you actually wanted to take possession of metal versus the spot price back in, say, March and April timeframe, it seems like that's just another manifestation of here's the Comex exchange actually having to bid up the to settle those who are standing for physical delivery to say, okay, actually the physical fair price is actually a lot higher than this paper spot price. Old World Order says, would you please explain how allocated bullion accounts like Bullion Vault operate? I'm concerned that they do not have an infinite supply of physical, yet when the panic was on recently and physical dealers ran out, they didn't. If I buy physical, I must pay a premium, which doesn't happen on Bullion Vault. Can one buy from them at spot and then request delivery, avoiding a premium?
Well, one can do whatever one wishes to do at the end of the day in precious metal. Let's just say arbitraging an exchange against a potential purchaser of physical metal is very likely a fool's errand. You'll probably get yourself in trouble doing it. Requesting, even if you're mega wealthy, requesting a whole batch of physical metal and expecting to get really, really quick or timely delivery of physical metal probably won't occur. So, I mean, you can try. If you happen to find somebody who's in a distressed position who happens to own some physical metal, count your lucky blessings, because you're probably going to get your best deal on metal in a situation like that. But I would suggest to you that those situations are few and far between. My view towards ownership of physical metal, there's never such a thing as a bad time to acquire physical precious metal. And as long as one has a long enough time horizon, the price to me over time is upward to the right. And this is where it has to go. And like I say, again, it's because of how much money is being printed, much of it not even acknowledged. It's off-book money. But this amount of money is seeping into the system. It's keeping everything inflated in price, whether it's equity prices. I mean, look at the NASDAQ. Look at the S&P. Look at physical precious metals prices. They're depressed, even at record highs. Physical precious metals prices are depressed, and it costs a lot. If you can think about this intuitively, it costs a lot of fiat money to suppress the price of metal when everybody wants to buy physical, and to create the illusion that prices are going down on a futures exchange. That's an expensive proposition, and you need to expend a lot of fiat money to keep that belief or to keep that prospect believable. It's an illusion. It's like going to see David Copperfield when he makes a Learjet disappear behind a curtain. Learjets don't disappear behind curtains. And the price of gold shouldn't be where it is either. And the fact that it is means that people still believe Learjets can disappear behind curtains. But behold, a day will come when the whole world stands up and says, you know what? The show was great, but gold shouldn't be where it is, and Learjets don't disappear behind curtains. Plain and simple. But this is where we're moving. This is where we're going as a species. And I hope everyone's enjoyed the show, but it won't last.
Several of the viewers are looking forward to what will it look like when things shift dramatically from where they are currently. One example of a question on that, David Gray says, if I have a $200,000 mortgage and 20 ounces of gold, and gold goes to $10,000 per ounce, will I be able to pay off my mortgage with gold?
Well, that's a great question. Let me just answer it this way. What happened in Germany when they experienced their Weimar hyperinflation? People had that in mind, that they'd be able to pay off their current debt obligations with, devalued currency at some point down the road. And what happened in Germany is, instead of allowing people to pay off their debts in debased currency, they indexed mortgages, for instance, were indexed to the price of gold. So you lost your ability to repay the debt in debased dollars because they quickly changed the rules. Just remember, our global monetary system, it's a country club that is run by elitists. And as long as they're in control, they make the rules. It's their club. So they can change the rules anytime they want. This is why forever, Dunnigan, I've said, if you're not positioned for what's coming in advance, you will miss. You will miss it, because it's. I'm going to say it to a point. It's sort of a trade of a lifetime. Maybe it's not happened as quickly as I might have anticipated, but I've been on the gold train since $300, and people who bought into it early really haven't been punished. They've all done quite well, and I've been on the silver train since $6. So, has it been a straight line up? No, it hasn't been a straight line up. It's been a bloody battle the whole way. But lo and behold, the prices are going higher because they must. Because the amount of money that's being printed absolutely dictate and guarantee that prices will go higher. So, but does that mean they might not club the living daylights out of metals on the futures exchanges tomorrow? I'm not saying that won't happen. I'm just saying that if one has their wits about themselves, and I'm not saying for anyone to mortgage their house and run out and buy physical metal tomorrow. I'm just saying that as one has the ability to acquire over time, it's probably not a bad idea to have some, because in my view anyway, the prices can go a lot higher. And that's all predicated on my understanding of how much money is being printed. So it's got to go higher, and it will go higher, as will cryptos.
The other effect of that runaway money printing that we only know snippets about, we don't see the whole iceberg, just a little bit, is what it does to the currency itself. Diana says, how much time are we likely to have before the complete destruction of the US dollar? I've heard projections from months to 10 years. That's a very wide range.
Well, my answer to that is, when I know how a story ends, it's irrelevant how we get there. This story ends in tears. This story ends with destruction of the dollar and rejection of the dollar as the world's reserve currency. I sure hope I'm alive when it happens. Let's just say when it does, it's not going to be pretty. And it's not necessarily the kind of world that any of us would wish for. But it's coming whether we like it or not, because the money is being printed. And if they stop printing the money that they're printing, the whole system collapses on itself. So these guys, if these guys have a mantra, the people who are in charge, if they have a mantra, it's live to play another day. Okay? These guys are experts at kicking cans down roads, and they will continue to kick the can down the road If they run out of road, they'll try to kick the can in the bushes. They will keep trying to kick the can until they come to a brick wall. And then they will not be able to kick the can any further. This will occur. I can't say when it's going to occur, but you see, I don't care because I know how the story ends. And I'm playing for the end. So that's my view, and that's what I stick to.
You and I were speaking before we started the recording about our roles as fathers and, in your case, soon to be grandfather. I'm already a grandfather of 6, soon to be 7. And thinking about that road ahead and that world to come, and thinking of it generationally, thinking of it not just for ourselves but for our children and grandchildren. Jacques Bourne asks, Rob, there is very little doubt we are approaching a crisis that will rock this civilization to its core. What do you expect to see on the other side of this crisis?
A world probably much different than what we've been accustomed to. I mean, listen, we're all human beings. We all have a shelf life. I speak from my personal experience. I got very ill last year. I nearly died, and I survived, and I was very lucky to survive. But just as on a kind of a personal note, getting healthy is a good idea too. To be prepared for whatever comes. I've undergone some lifestyle changes myself. The notion of being a grandfather very soon has changed my way of thinking about things, and hopefully I'm going to be around to witness some of my grandchild's formative years. And I've undertaken some lifestyle changes. I've lost a lot of weight, and I'm just getting healthy. So I think everybody could do with a little more health in their life. And for those who are already on that train, keep it up, because you know what? I honestly think the road's going to get rougher, and we all need to take heed of that and be in the best shape we can. Get down to your fighting weight, and get healthy, because you're going to need your health. And if you don't have your health, you've got nothing anywhere.
We have a question on that line from Jeff Loke, who's thinking about you. He says, how is your heart? And he put a picture of a heart there too. I think he's thinking not just about your physical heart, but also that you're bearing up with the world as it is and the world you see going forward.
Yeah. Well, listen, you got to have heart. And my health issue that I encountered last year was not a cardiac incident. It was actually pulmonary, and with my ability to breathe. And but I mean, good cardiac health. Listen, good fitness, period, is probably your most vital and important asset. Way ahead of anything else, way ahead of gold, way ahead of silver, because if you don't have your health, you're never going to spend it anyway. Or you're never going to be able to do anything with it anyway. So it should be everyone's most prized asset is their physical well-being and their mental well-being as well. Spiritual well-being you can throw in there also.
And close family relationships and good friends that are really there for us and for each other, supporting each other, because that's what happens in tough times is we need each other.
Yep, absolutely.
Well, Rob, I was grateful when you were able to accept this interview request, and just if you could give people a chance to understand how they can follow you and how they can support your work.
Well, you can catch me on the web at kirbyanalytics.com, and that's where I am on the web. And through outlets like Dunnigan's, I try to impart my words whenever I can.
And is there a way that people can help you and further your mission?
support's always welcome and appreciated. But you know what? It's a tough fight, and it's been a long and protracted war with the monetary elites, and I don't see it ending anytime soon. But I think we have the upper hand. So we like to think, or at least I like to think, keep stacking. If you're into the precious metal, keep stacking. And how much of a good thing is too much? I don't think you can ever have enough.
We've been speaking with Rob Kirby, the founder of Kirby Analytics. Rob, thank you as always for joining us here on Liberty and Finance.
Been my pleasure.
To acquire gold and silver, just go to libertyandfinance.com. When the main site comes up, click on Bullion Sales. That's libertyandfinance.com, Bullion Sales. You'll see my name, Donegan Kaiser, my phone number, and my associate Kaiser Johnson, his phone number, our email, libertyandfinance@protonmail.com.